Hey, y'all, thanks for tuning in to the GI Justin channel. Really appreciate you guys showing up today. And, I want to talk to you today about a different kind of preparation, about preparedness of finance. More news today out. First Republic Bank has reported the worst earnings they've ever had. You've got Credit Suisse doing terribly. SVB, which, we've gone over a couple times now how poorly things have gone for them, and it looks like the government is stepping in to help them out, and banks are lifting every asset they can manage to buy that back up. So that's interesting. But preparedness and preparation is about a lot more than just ensuring that you have ammo and food and water. It's also financial preparedness in the event that we don't see a nuclear attack like we talked about the last couple days, but that we see a financial meltdown and your assets and your finances and your ability to protect your family financially become a big problem. So really what they're calling this thing is the everything bubble, which is scary, because you've got the financial market in turmoil right now. You've got the crypto nightmare of last year where, according to some accounts, $2 trillion in money was just lost. The technology meltdown that we've seen in the last 6 months where the NASDAQ has lost a quarter of its value. $5 trillion in the NASDAQ just gone. You had companies with amazing valuations just gone. If you're invested in the stock market, that's your money that's disappearing. So how does that go? These problems they're really moving into our financial system at that point, and I think that's one of the things that I find problematic. You've got the U.S. banks in March itself, between U.S. banks, European banks, and some of these other banks from other countries. The estimate right now in market value in the banking stocks is around $460 billion gone. Just $460 billion of your money, my money, anybody who invested in, SVB, Bank of America, all these stocks, just gone. And the biggest cause that they're relying on right now is the rapid increase in the interest rates that we're seeing put forth from the Fed. Because part of the deal there is, when money was cheap, everybody was getting loans. Everybody was mortgaging their house, building a new house, or taking out a line of credit against their house, because at 2%, why wouldn't you? Money was very cheap. So what happens now is you have this bubble and the speculation caused in the market from people spending money on meme stocks and, XRP and all of these random cryptocurrencies that actually were backed in absolutely nothing. Look at the mining of them. They're just made. They can't tell you where they come from. They have no actual value. They're just intrinsically created by these blockchain mining companies. And the thing I think is scary more than anything is that these higher rates and the failure of our security system is weakening the entire global banking structure. So the thought process that I have here is I don't think the issue is over. So this interest risk situation that we're seeing is almost causing a depression era run on capital and liquidity. You've got all these banks that are losing 60% of their value, and the FDIC can step in, but beyond $250,000 per account, your money is just gone. So, it's an interesting thing. So, like I said before, you've got these banks where the estimated loss in their value is around $2 trillion right now. And as things continue, that number could increase significantly. And that number is before all of these losses related to these high interest loans that we're seeing now when it comes to real estate and companies that are super, super highly leveraged. And those aren't the only places that there are major issues. So for the last couple of years, investors, angel investors, and traditional investors have utilized venture capital in startup businesses. So basically, they've come along and said, hey, kind of like Shark Tank, we like your idea. For 20% of the company, we'll give you, $5 million. And the problem there is that this private equity flowing into these startup businesses has declined by about 2/3 from 2021 as a result of people just losing money. These companies are starting up. You've got a company like Palantir that just now reported, they're basically a cybersecurity cloud-based system. They just now reported after a couple of years of doing business, just now were they even profitable enough that they can turn a dollar. So what's happening is these companies require a ton of money to continue, and when they can't, they close. So if you're one of these investors, cool, you get 20% of the company. What happens when the company fails? There goes your 20% along with whatever money that you put into that 20%. So just another way that losses are happening. Another way that we're kind of getting there is that we had the huge financial crisis of 2008 where all this bad money was being thrown around and mortgage loans were being created to people who shouldn't get mortgage loans. Money was being moved left and right, and they were basically considering mortgage debt to be an asset that they could purchase. So these regulatory restrictions on banks have shifted, these higher risk or complex lending structures to a different style of banking where mutual funds, hedge funds, and pensions can take over and buy these mortgage-backed assets, as they call them. So about $225 trillion of these existed in 2021, which is about half the size of the financial economy. And the thing that is crazy there, is all of these companies faced not a ton of regulation when they started doing this. And now with that smaller amount of regulation on all of these things, small regulation increases risk because these rapidly growing, hedge funds are basically getting into and buying up these mortgage-backed securities, creating this term called volatility laundering. And basically what this is internal sales and funding. Basically they sell these things and they move them around enough times where everybody makes money on them and no one actually owns them and manages them. So, if I buy these mortgage-backed securities for X amount of dollars, I do nothing with them. I just ship them off to another company who pays me for them. Then the balance of you paying off your home loan and the balance of you paying off, a real estate property you may own goes to me, but then the next guy just owns it and now he owns it free and clear. So there's no actual ownership there, and that's how these things end up. So now that we have a difference of regulation in the White House, what you're seeing is the increase of regulation. So all of these companies who were previously able to just move these securities around and make money off of them are losing the ability to do so because the government watchdogs are now taking hold and saying, whoa, if you're going to own these things, you actually have to manage it. These are people's mortgages. These are people's real estate. You can't just shuffle them around a deck of cards and make money off of it and kick them out to somebody else. So another interesting way that these things are happening is we face a lot of instability financially through the actual economy. Currency and interest rate are flying around. Currency's value are going up, down, left, right, and there is no control to this volatility because the Federal Reserve and other central banks know they need to keep the rates high to keep inflation under control, but at the same time they know they need to work on fixing this instability by loosening the policy that we have related to our money. So the problem they face there is which lesser of the two evils do you choose? Do you choose low interest rates, crazy hyperinflation, or do you choose high interest rates with high monetary regulation and a higher volatility of funding and a higher volatility of money transferring back and forth between companies. So I think where I want to get to with all this and explaining all this stuff is to say, more importantly than anything, in terms of financial preparedness, I think you have to start looking, if you aren't already, at gold and silver. I've linked in the description a company called Hard Asset Alliance. And what they do is they allow you to purchase gold and silver and have access to it at any time. And the thing that is beneficial about it is you own that gold, you own that silver, and it's a great way to hedge against future volatility. We can't tell what's going to happen in the stock market or the bond market, but when you own physical gold, physical silver, what you find is on a long enough timeline, it continues to go up in value. There will be dips, but as long as there are precious metals, you're in a situation where you own that long term. It's in your safe, it's wherever you keep it. Until you do something with it, it's not taxed over and over. It's yours to keep and yours to hold on to. And on an interesting survival-based thought process, if we were to get into a bartering system, it sure would be nice to have your hands on some gold and some silver where you could say, hey, cool, I would like to buy some ammo from you. Here is a little bit of gold. Boop, there you go. Thank you so much. So I really, like I said all that to say this. I think the key is, for right now, purchasing gold and silver and keeping them as hard assets available to you that will hedge against future inflation and all these people playing roulette with your money. And also along those same lines, if you are going to invest in the stock market, and this is not personal, stock buying advice or whatever, I'm just giving you my thoughts. Investing in companies that are the best of breed in their class and companies who we know aren't going anywhere. So, I think you use those two approaches, and in the financial preparedness universe, you will be as best prepared and as best set up for the future for any possible eventuality that may come about. So with all that being said, I want to thank you guys for watching the channel today. I know this is a little bit of an interesting video, a little off track with what we normally do, but I think that the financial preparedness is something we can use today that is very crucial. So if you guys haven't subscribed to the channel already, please do it. It's a great opportunity to do that and a great opportunity to help me out. So thank you guys so much for that. So throw a little like on this guy. And as always, I appreciate the comments because it's super fun interacting with you guys. So thanks so much and have an awesome day.